Hello and welcome to Indian Markets Unveiled, a daily market podcast where we decode the Indian financial markets. Not only the Indian markets, but in this podcast, we give you a quick eye view of what one needs to consider during the session. So let's get started with the global market news first. Talking about the global markets, one can say that it is a mixed bag there because the Asian markets have tried to start on a positive note, giving some supports, but the US markets overnight did see some heat. Stock futures were little changed on Thursday evening as traders braced for major bank earnings. S&P 500 futures and Dow Jones Industrial Average futures oscillated near the flat line, and Nasdaq 100 futures inched a little higher. All the three major indexes ended the day trading session in red, with the Dow Jones dropping more than 173 points, S&P 500 sliding by around 0.5% or even more, while the tech-heavy Nasdaq index also did lose around 0.5%. So even though the three major averages ended Thursday with losses, on a weekly basis the pace still seems to be on gaining front. The S&P 500 on a weekly basis was up around 0.9%, while the Dow is up around 0.7% if we have a look at the performance up till now during the week. And the Nasdaq Composite is the outperformer of the three, which is up around 1% till the Thursday market close. One should consider that this is the third positive week in a row for the Nasdaq and the second straight positive week for the S&P 500. The Dow is also set to snap a string of 3 straight weekly declines. So clearly, on a day-to-day basis, we see volatility in the US markets. However, if we have a look at the weekly trend, the positivity is still there. Talking about the Asian markets, one can say that the Asia-Pacific stocks stumbled as traders parse China's inflation data. We clearly see that the GIFT Nifty is trying to support the market. The GIFT Nifty is sparring in greens ahead of Indian markets opening and started trading somewhere around 19,690 level. But apart from that, the Nikkei, Kospi, Hong Kong and Shanghai markets are trading in red, where we see that the Hong Kong market is trading currently with a loss of around 300 points at 17,953 to be precise. Again, the Nikkei market is also trading in red with a downtrend of around 100 points. One needs to consider the economic indicative action which happened overnight, which gave this impact to the global markets. The hot core US CPI data sparked debate, where we did see that the US core CPI was at 0.32% on a month-on-month basis, which is hawkish relative to the consensus. The economic indicative action was also tuning in for the Indian markets, where we did see that the India August CPI fell to 5%, which is slightly lower than the expectation. Also, the IIP growth was at 10.3% in August as compared with the revised growth of 6% in July. There are chances that the CPI data may provide breather to yields, which were higher since Monetary Policy Committee review. The US 10-year bond yield jumped at around 14 basis points to 4.7%. On the other side, the dollar index was positive by more than 0.5% at 106.51. Talking about the energy pack, the oil signs reverses gain after US posts large crude build. The Brent crude at present is trading around $86 to $87 a barrel. Also, if we have a look at the bullion market, the gold market subdued as yields and dollar rise after US inflation data. So that is what the global market and trend looks like, which is a mixed bag. Also, it being a Friday, one needs to consider that there might be volatility creeping in, which one needs to be cautious about. Let us now take a look at how did the market close in the last session and then quickly deep dive into what one needs to expect from the session today. So equity benchmark indices entered into a consolidation mode after a 2-day rally, with the Nifty 50 closing a tad below 19,800 mark with moderate losses in the last session. The index remained in the range of 19,715 to 19,850 for yet another session. Hence, the decisive breakout on either of these ranges can give clear direction to the market going forward. Talking about the closing levels in specific, the Sensex fell around 65 points to 66,408, while Nifty dropped around 17 points at 19,794 and formed a bearish candlestick pattern with minor upper and lower shadows, which resemble the spinning top kind of pattern on the daily charts, indicating indecisiveness among bulls and bears about future market trend. Throughout the session on Thursday, the Nifty barely moved outside the previous day range. Looking ahead, we can expect the market to continue this range-bound movement until Nifty makes a decisive breakout either above 19,850 or below 19,750. Well, on the other hand, the broader market indices outperformed benchmark indices with the Nifty mid-cap and small-cap indices climbing around 0.5%. Talking about the volatility, the India VIX, which measures the expected volatility for the next 30 days in the Nifty 50, dropped for the third straight session, indicating some stability in the equity markets. The VIX fell by 3.34% from 10.99 to 10.62 levels. Let's talk about the key support and resistance levels on Nifty. Nifty may be taking support at 19,776 followed by 19,760 and 19,733. On the higher side, 19,830 can be an immediate resistance followed by 19,847 and 19,874. Talking about the Bank Nifty, on 12th of October, that is the last session, the Bank Nifty also saw consolidation for yet another session, trading within the previous day's range. In fact, the trading range narrowed down compared to the previous day. The index finally settled with around 82-point gains at 44,599. Considering the pattern, one can expect 44,400 to 44,300 zone as a buying opportunity. Once this consolidation matures, there are chances that the positive momentum can resume on the upside till 45,050 to 45,350 levels as well. Talking about the FIs and DIs data, the foreign institutional investors sold shares worth 1,863 crore, while the DIs, that is domestic institutional investors, bought around 1,532 crore worth of stocks on 12th of October. Now let us quickly take a look at the stocks and news which might create an impact when the markets open up today. Starting with the IT giant Infosys, India's second largest IT services exporter, has recorded a 4.5% sequential growth in net profit at around 6,212 crore for the quarter ended September 24, with revenue rising around 3% on a quarter-on-quarter basis at 38,994 crores. Operating numbers were ahead of the estimates and revenue in dollar terms increased by 2.2% on a quarter-on-quarter basis to $4,718 million, and constant currency revenue growth stood at 2.3% for the quarter. So one can say that after the shrank seen in the TCS results, one can see relief coming in from Infosys numbers. The second up in the news is HCL Technologies, as IT services company has recorded net profit of around 3,832 crore for the quarter ended September 24, growing around 8.4% over the previous quarter. Revenue for the quarter increased by 1.5% sequentially at 26,672 crores, with dollar revenue growing around 0.8% and constant currency revenue growth growing at around 1% compared to the previous quarter. Next up in the list is the healthcare, diagnostic and pharma space, and Dr. Reddys Laboratories is creating news as the United States Food and Drug Administration has issued a Form 483 with 9 observations for the company's manufacturing facility in Bachupalli, Hyderabad, after completion of its product-specific pre-approval inspection at the said facility. Maruti Suzuki is another stock in focus which needs to be considered during the session, as the country's largest car manufacturing company said that the board of directors will be meeting on 17th of October to consider the issue of equity shares of the company to Suzuki Motor Corporation on a preferential basis. The consideration of issuance of equity shares will be other than cash for the acquisition of a 100% equity stake of Suzuki Motor Corporation in Suzuki Motor Gujarat Private Limited. Up next is SJVN, as the company's subsidiary SJVN Green Energy has received the letter of award at a tariff of Rs 2.62 per unit for the development of a 100 megawatt solar power project from Rajasthan Urja Vikas Nigam in Rajasthan. The solar project will be developed on a build, own and operate basis. The tentative cost of the development of this project is around 600 crore. A positive news flow coming in for Ircon International, as the Department of Public Enterprises has granted the Navratna status to Ircon International. Ircon will be the 15th Navratna amongst the CPSEs. And last on the list is 197 Communications, as the Reserve Bank of India has imposed a monetary penalty of 5 crore on Paytm Payments Bank, part of mobile payment company Paytm, for non-compliance with Know Your Customer norms. So let us now quickly take a look at the important results and the list of a few important companies which will be posting its numbers today. Going with the important numbers, HDFC Life Insurance, Aditya Birla Money, Tata Steel Long Products are the few companies which will be posting its numbers, and since the company will be posting the numbers, will be in focus ahead of quarterly earnings. With this, we come to a wrap of Indian Markets Unveiled for today's session. To sum it up, the markets would be focusing on the earnings coming from different sectors. The earnings season started on a muted note when we did see TCS reporting lackluster numbers, but the positive set of numbers coming in from Infosys and HCL Technologies will definitely support the market. All in all, it is going to be a busy day for today and tomorrow, and investors should be more cautious before taking leveraged long positions ahead of such crucial cues awaited today and tomorrow, along with the results-specific season as well. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art we understand. We at Deven Choksi have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on the wealth building adventure together. Thank you.